Good morning, guys. Welcome to TalentBlazer, India's latest edtech platform that is there to help you at every stage of your career. Now, I'm your teacher and mentor in this journey, and I'm covering UGC NET Paper 2 Commerce. The subject code for the same is 08. And I'm continuing the video series, and in this video, I'll talk about in this video, I'll cover Unit 7. I'll start with Unit 7, that is Banking and Financial Institution. It is a very important unit because all of you must have studied the financial market, financial institution, and a relevant subject related to it in your UG and your masters as well. So, in this class, what we will discuss, we'll start with the basic things, and most importantly, as you guys must be knowing, that UGC NET paper application form is out, and you can fill up the application form if you want to write the examination in June. I hope everyone who is watching this video write the examination in June, and all the team of Talent Blazer is there to help you for your preparation. I am covering few units, some other faculty is covering other units, so we are there to help you, so you don't have to worry about your examination. And if you are following our videos, and those will be very helpful, and you can download the TalentBlazer app as well, because on that app there are plenty of mock tests that will help you to clear this examination. Now we'll start with Unit 7, right? So what is financial system, why it is needed, and why is needed in the first place, and why it is required. So we'll talk about financial system. So I'll give you an example. Let's suppose, if I'm earning something, I am coming into the saving sector of an economy, because I think most of you must be aware there are multiple sectors in an economy. I'm a household sector. I'm earning some money. I'm earning some salary, and that amount of salary I spent some portion of it on expenditure, and the rest I'm saving. And what method of instrument on the way I am saving my amount? I'm saving that amount at my home, at my place, not keeping in bank accounts, not keeping it somewhere else. I'm keeping that amount at my home safe. Now, that amount of money is just out of the economy, because that amount isn't being used, that is kept at my home safely. That creates problem, that creates trouble. How? Because let's suppose if I keep the same amount of money in the bank account, now what will bank do? How will bank earn? So bank will provide me some interest rate. And why should I keep my money in bank account, or in any other financial instrument? Why should I save them in any bank account, right? In bank account or through any financial instrument. So the first thing, the basic thing is, inflation concept. As uh, time goes, the value of money decreases. If I have 100 rupees with me right now, after a year the purchasing capacity of 100 rupees would be less. I think the with 100 rupees I could buy something of amount of 94 rupees, right? So the purchasing power would be less compared to right now with next year. So what happens usually is, that amount of money if I'm keeping with bank, I will get some interest rate. So that interest rate will help me to combat inflation, right? That's an economic concept, but all of the concepts are interlinked. So I was just briefing about it. Now, if I'm keeping that amount in my bank, right? If I'm saving my amount in bank, now bank will use that amount to lend to someone. To whom? To someone who is actually in dire need of that finance, someone who wants to construct something, someone who needs finance to run a company, to actually build a new plant, and for some capital formation activities. Now that money will be used, L- that that is my money that I have saved in the bank account, and there are multiples of me, like as in there are multiple of people, 360 million or more than that. Those have bank accounts, and they certainly have kept some amount in banks, right? And not everyone will withdraw at the same particular date. So what will happen? Bank will lend some amount to anyone who comes up with a form or with a vision that, and they have a collateral with it, certainly specifying that, we have to construct something, give us loan and we'll pay you the amount with some interest. Now that is the basic function of financial system. I hope everyone is clear till now. So financial system plays a vital role in economic growth of the country. It intermediates between the flow of funds belonging to those who save a part of their income. As I said in my example, if I am saving some amount of money, and those who invest into productive asset, as someone who needs that money to actually build up a new company or start up a company. So bank will act as an intermediate. And let's suppose if there is no bank, will that particular person who wants to start up a new company, how will he raise funds then? Will he knock everyone's door that, give me some money and I will repay you back? That will be a troublesome, cumbersome process as well, difficult to manage. Now, financial system has the following components: financial institutions, financial markets, financial instrument, and lastly, financial services. We'll discuss them one by one. So, what basically happens here, it intermediates between the flow of funds belonging to those who save a part of their income and those who invest in productive assets. It mobilizes and usefully allocates scarce resources of a country. So what you basically happening in this process is, I am the one who has the money with me, and there is someone who needs that money. Right? Not only my money, but there are multiple bank account holders, and he needs a huge sum. So I deposit my money into the bank account, and from bank he gets a loan. Bank pays me interest on the savings account, and that person who takes loan from the bank will actually pay the bank interest and the principal amount, right? So this is what financial system is and why it is needed, because of the country economic growth. Because if we want our country to grow, we need some industries to come up, right? We need more businesses to grow up, and they need finance. Not everyone has are so resourceful, because in our country not everyone has that resources, but they do have the knowledge. And let's suppose they have the collateral to raise some amount of money, and then they can get the loan from the bank. So this is about the financial system. Now we'll talk about Indian financial system and what are the classification. So Indian financial system can be broadly classified into two: formal system and informal systems. So what basically happens in formal system? In formal system, there are rules, regulation, and a format, and they are being guided through some guidelines, right? In a formal system, and we are talking about formal financial system. So there are certain regulatory bodies, and such bodies are Ministry of Finance, RBI, Reserve Bank of India, Securities and Exchange Board of India, SEBI, and there are other regulatory bodies as well, like IRDA and PFRDA, for insurance and pension funds respectively. So these are the regulatory bodies. And why do we need regulatory bodies? Because these bodies make sure there is transparency, there is accountability, and the people trust. Why would I save my money into the bank account? Because there is some trust. RBI is managing all those banks, so I trust them, right? They won't run away with my money, right? So there is some trust, and these formal bodies actually make sure and ensure that there is trust maintained throughout the system. Now we're talking about informal financial system. So when you are in dire need of some money, right? Let's suppose you want 10,000, 20,000, and you won't go to the bank for such for such amount, and they won't give you a loan for that amount. So what will happen? You will go and ask your friend. You will go and ask your neighbor. Actually, I'm in dire need of this amount of money. I'll repay you back whenever my salary gets credited uh, on the month ends, or in the next month. So what will happen? You'll go to your neighbor, you go to your friends, or you go to your landlord, or the traders, and there are store owners as well. So that is called informal system. For informal financial system, you're going to someone who does not form a part of financial system, formal financial system, and you are going to your neighbor and asking him for money, him or her, for the money, and they are giving you the money, but there are certain terms and conditions. Some friend will charge you interest, some friends will say, take it and repay me back whenever you are in the situation to pay me back. So that is informal financial system. So the examples are informal money lenders, neighbors, relatives, landlords, traders, and store owners. Now you must have heard of the concept of committee in India, right? Because that is a pretty known informal concept in India. So what usually happens, there are people of different groups, right? They form a committee, and everyone deposits some amount of money. And let's suppose someone needs that money to finance. their daughter's wedding or some other activities to fund someone's education. So they actually go and ask for the money from the committee because they are also contributing to it, and they are also part of it. They can vote into it, and what are the and whether we should finance someone. So the terms and conditions are defined by the committee itself, right? Not through a regulatory body. So Indian financial system are classified into two. One is formal system and other is informal system. I hope it is pretty much clear till now. So we'll move on to the next, the components of Indian financial system. Now, I told you about this a minute ago. Indian financial system can be classified into the four components: financial institution, financial market, financial instrument, and lastly, financial services. So we'll study about them each of them one by one, and it is very important and crucial to know what role a component plays in the whole financial system. A financial system is made of all the four components. The financial institution, market, instrument, and services. So we'll talk about financial institution first. So, as the name suggests, financial institution, these are the institutions which are there. You know, some of them accept the deposit. They actually are there to accept the deposit, and the other function is they lend some money, right? So, financial institutions are intermediaries. Do focus upon this because they are intermediaries, right? They are not doing something of own, right? They are not, being the one. They are between the savers and investors. They are intermediates. These are intermediaries that mobilize savings and facilitate the allocation of funds in an efficient manner. So, what does it means in an efficient manner? So, bank won't give loan to anyone that shows up to their door, right? They will look to their background, they will look to their credibility, and after that, they'll decide whether to give a person loan or not, because they have to make sure that that person repays that amount with interest as well. So these are intermediaries that mobilize savings from me. Let's suppose if I have my bank account and I'm saving some certain money, so that mobilize saving, and that money, bank won't keep that money with them for, like, oh, they won't be holding that money. They will lend it to someone for some productive purpose. Now, financial institution can be classified, they can be further classified, right? They can be classified as banking and non-banking financial institutions. So there are banking institutions, there are non-banking financial institutions. We'll discuss about the banking and non-banking financial in the next video, because that is pretty much dedicated to the banking institution. Now, what are banking institution and what are non-banking institutions? We'll discuss them just in a brief here. Banking institutions are those who are creators and sellers of credit. So banking institutions are those that they actually accept the deposit. They are allowed by RBI that you are able to accept the deposit from people as well. And while non-banking financial institutions are sellers credit, they basically provides credit. They don't accept deposit. They'll provide you credit. Let's suppose you are someone who actually need finance for manufacturing purposes, for export import purposes, and you specifically go to an institution that lends money for those purposes. They do not accept money as a saving option. They do not provide a saving option to their customers. They only lend money, right? So these are financial institutions. I hope everyone who is following till now is clear with what financial institution is.